Good evening, Strategic Alpha community members. Good evening, Conviction Club members. Hope I am audible. And so, thank you everyone for joining in. So, we are up for yet another weekly community connect session. And the topic for today is margin of safety. And we'll discuss that why it is a hidden armor of every great investor. So we'll be discussing about that. So without wasting much time, let us go forward and start with this weekly community connect. So this is the agenda for today. So first I'll be taking you through margin of safety concept. Then I'll be talking about the market, Nifty and mid cap, and also market breadth indicator. Then I'll be taking you through capital market theme update. Then the Indian market versus US market, which markets can outperform going forward. Then I'll be talking about precious metals. Is it a start of a fresh uptrend, or is it a bull market trap? So we'll be discussing about that. Then we'll be also discussing about PSU Bank Sector update, Bitcoin update, then sector rotation and stage analysis update, what to do with mid and small caps, where are they headed, and the update on turmeric. So this is the agenda for today. So without wasting much time, let us directly move on to the discussion of margin of safety. So what is margin of safety? Margin of safety is like a protection measure. It is an additional layer of safety wherein you can become a worry free investor. This is in simple terms, a layman which can understand. So, and in terms of definition, if I want to talk about what is margin of safety, so margin of safety is like buying a stock or a asset below its intrinsic value of a company. So whenever you buy a stock below its intrinsic value of a company, you are least affected with any mishaps that might happen. So how to calculate intrinsic value of any company? In bookish terms, it is like, if you have a business, and if you can, and business generates cash flows. So if you can discount the future cash flows, let us say if there is a business which is generating 100 crores of cash flows per year, and these cash flows can increase going forward as we move ahead. Let us say we are sitting in FY 2025. In 2026 it can generate some cash flow, 27, 28, 29, 30. Let us say 5 years or 10 years in future, whatever the future cash flows are, if we discount that with a proper discounting rate, it might be 10%, 12%, depending upon the growth rate of the company. It might be even 15%, or if the company is growing at 35%, depending on that growth rate, you calculate the cash flows for each year. And if you discount that cash flows to today's terms, today's date, and whatever the value might come of that cash flows, it is discounted cash flows of all future cash flows. And whatever you get that value of company, that will be called as a intrinsic value of a company. So discounted figure of all future cash flows. It can be decadal cash flows also. Usually it is, I take 10-year cash flows. So if you are able to, if you know that value, and if you can buy a company, a stock below its intrinsic value, This, the difference between your buy value, buy zone, and the intrinsic value is called as the margin of safety. Because let us say if the company's market cap of a company is, uh, let us say 1000 crore, but on the basis of all future cash flows, you are getting a value of 1500 crore, which means you are getting a company at 30-35% below its intrinsic value. And whenever you get such business lower than its intrinsic value, let us say any mishap if happens in the market, you are well protected because you bought a stock below its intrinsic value. Because markets can be volatile in short term, even in medium term, and even in long term. But if you know what is the intrinsic value of a company, and if you buy a company below its intrinsic valuation, you are least worried about what can happen in the market. It doesn't mean that if you, let us say, if the intrinsic value of a company is 1500 crore and you bought that company at 1000 crore, it doesn't mean that stock will not fall down. What it means is you bought at a significant discount already, because no one can predict the markets. Like right now the situation is like every people are worried about US markets, how and when the bubble can burst. So in such cases, if you buy a stock and if the stock goes down, because stock markets are volatile in short term, the stock might go down, but you are least worried because you know this is a market bubble problem, not a business problem per se. There might be some recession which might be happening in the economy, maybe in that sector. But in you don't see a long-term fundamental change happening in that company. And if you buy the stock below its intrinsic value, you are least worried. Even if the markets fall, you're confident that stock can bounce back. And this is what is a greatest and the biggest armor of a great investor. So that is why it becomes important for any person to understand what is the intrinsic value of a company. And let me tell you, calculating intrinsic value is not that easy. There is a, if you go on screener.in, some people might say there is a readily number available on screener.in, but don't rely on such any numbers, because what happens is the intrinsic value of the company changes as you are seeing that business, because the value lies in the eyes of beholder. The way you are looking at business, your calculation of intrinsic value might be different than what some other person is calculating. Because what happens is, let us say if I want to give you an example of Bombay Stock Exchange. So Bombay Stock Exchange is a stock exchange, national, it's a stock exchange where stocks are traded. But if I calculate the future cash flows on just on the basis of understanding that Bombay Stock Exchange is a stock exchange and it gets revenues from stock exchange itself. But so my calculation of intrinsic value will be different. But I am seeing an optionality, if I am seeing an optionality in Bombay Stock Exchange, let us say, where it is not only an exchange, but it is also a data provider. So that business of data providing becomes an additional business which I not didn't thought earlier. Because as of now, Bombay Stock Exchange or any exchanges provide free data until recently, but now they have started charging for data. So data itself can become a similar business like what they get revenue from exchanges. Now, if I have not counted that into my calculation, my intrinsic value changes. So if I am looking at Bombay Stock Exchange only as a stock exchange, my intrinsic value will differ. But if I look at Bombay Stock Exchange as a fintech company, my intrinsic value will completely differ. So that's the reason why it cannot be a single number, and it has lot of assumptions, and as your assumption changes, the intrinsic value of a company does get changed. So what is the best solution for it? So if you are thinking that if I'm just readily get that intrinsic value on the screener.in, uh, you might be in a trouble, because as I said, that value lies in the eyes of beholder. So what is the best solution, and how can you arrive at the right intrinsic value of a company? To arrive at a right intrinsic value of a company, you need to understand a business in depth. More you understand the business in depth, more your approximation, because intrinsic value is not a straight number, it's a range. The more you understand a business, more your approximation of intrinsic value will be closer to the reality. So what is the solution? The solution is circle of competence. During the next weekly meet, I'll discuss in detail what is circle of competence. But in short, I'll tell you today, there are 65 different types of subsectors in India. There are 65 different types of industries in India. You cannot understand all the businesses. What you can understand is the businesses which were closely associated. I see many a times person working in pharma sector is researching metal stocks. It is completely wrong. What should one do instead? Instead, one should do, whichever sector I am working, I have a fair bit of understanding, and I will start read more on the same sector, so that I get my circle of competence stronger. That is the only way. And if you just stick to your circle of competence, start working within your circle of competence, your approximation of intrinsic value for that sector, for that business, will be closer to the reality. So that is the solution for arriving at the right margin of safety. So that is how you calculate that is how the margin of safety helps. Because I'll tell you one example is Bombay Stock Exchange. See, Bombay Stock Exchange YouTube video, we did it in COVID 2019. The video is available. We also wrote a blog. I also posted that on Twitter. I also posted that on Telegram, VIP access. Because I understood, I've been working in stock market for the past 15-16 years. So I understand this stock market ecosystem very well. So I understood this business model of Bombay Stock Exchange very well. So we discussed this case in 2019. And in COVID, so even before COVID, I was very bullish on Bombay Stock Exchange, even before COVID happened. So even before COVID, the market cap of company Bombay Stock Exchange was close to 3,000 crores. Means if you had 3,000 crore, you can buy the entire company. And when I looked at the calculations, depending upon future cash flows and all, plus apart from the future cash flows, I also calculated few things. Bombay Stock Exchange, the stake in CDSL, cash on books, plus Bombay ka building. The valuation of liquidation value of Bombay Stock Exchange was close to 3,500 crores. And market cap of Bombay Stock Exchange was close to 3,000 crores, nearly 3,000 to 3,500 crores. That was the price market cap at which in 2019-20 it was available. So after that, now how margin of safety saved me? Some community members who were during that time hearing me would confirm about this, especially Balram or someone like that. So I bought this stock, Bombay Stock Exchange, because it was trading below liquidation value, and I didn't calculate the future cash flows also. It was available at a less than a liquidation value, and even if I calculate the future cash flows, it was the valuation, liquidation value plus future cash flows all put together. It was at 4,500 crores. The company was available at 3,000 crores, 3,500 crores. So it gave me a full confidence of margin of safety, because that is when I knew that I literally, and it was a debt free company, 150-year-old business, a debt free company. So I was sure that I cannot lose money here. I was not sure whether I will make money or not, but I was pretty sure that I cannot lose money here. So Bombay Stock Exchange was is a perfect example. So what happened after that? So just look at the chart. I'll also show you that chart. So what happened after that? I owned Bombay Stock Exchange before COVID happened, but I was least worried about it. So I'm just opening the chart of Bombay Stock Exchange. So what happened with Bombay Stock Exchange is, so usually, and this is when I spotted that before COVID. This is when I spotted Bombay Stock Exchange before COVID, when it met the criteria of margin of safety. And it was for adjusted for stock splits and bonuses, it was available at 50 rupees. So I owned this stock and I was never worried, because I was knowing that I cannot have a permanent loss of capital in Bombay Stock Exchange, because I was buying this below liquidation value. After that, COVID happened. Nobody could have ever predicted the COVID thing. So COVID happened. The stock came down from 58 rupees to 32 rupees, almost half. Not only stocks fell down, even gold, silver fell down. But I was least worried about it, because I knew I cannot lose money here. If humanity has to survive, I used to say this statement during that time in COVID. If humanity has to survive, stock market will revive. And if humanity is not surviving, what is the use of money which I will be putting that into stocks? So I was least worried. Let me be there in the stock even after the stock fell down. What happened? Sooner or later, the stock bounced back, and not only it crossed the purchase price, but later on 6 crore new demat accounts got opened, which I didn't knew at that point of time, that COVID will happen and people will open 6 7 crore new demat accounts. That became a big positivity for this stock. Then it became a multi-bagger. So margin of safety not only protects you on the downside, but if you get a optionality of the upside from earning side, the positive surprises can also help you make money. So indirectly, when you have margin of safety with you, what it happens is it protects the downside, saying that I always say that be a investor in a way that you're like Dravid on the downside, which is dependable, and Sehwag on the upside, which is whenever your bet goes right, after having margin of safety, even the least change in the fundamentals, stock can become a multi-bagger. And the same was the case with Bombay Stock Exchange. So I was least worried because I knew that I cannot have permanent loss of capital even after such a big thing like COVID, because nobody could have predicted the COVID. I just had to do nothing and sit tight on my investment where there is high margin of safety. Because what happens is, once in 10 years, no matter what you do, no matter how risk management you do, some sort of cash you will have, you will sell some stocks, but some investments you cannot completely be out of market. Let us say going forward, some bigger crisis than global financial crisis happens, you cannot just be out of market just thinking about global financial crisis. You have to be always remain invested, because nobody know, even during 2003 to 2008 people were talking about such crisis from 2005 itself, but it never happened for next 3 years more, and the markets kept on rising until 2008. So how to ensure that even after all this uncertainty, how do I ensure that even if such thing happens, I will be least worried? Yes, the stocks can go down, but if I just keep worrying and stay away from the markets, I might miss the upside. So what is the solution for that? The solution is own the stocks with high level of margin of safety, where you know that yes, there might be some temporary drawdown which might come, but I cannot have permanent loss of capital. So such accidents might happen at any point of time. The best way to safeguard yourself is by owning the stocks which have high margin of safety. So the previous case which I discussed was Bombay Stock Exchange. Now let us discuss about one more case, which is Bajaj Consumer. So Bajaj Consumer, when we discussed that case, I posted that on Twitter also just 6 months back. The stock was trading at, please, whatever we are discussing, it is purely from an educational purpose. Do not take this as a recommendation. Please do your own homework before taking any kind of investment decision. But we are just discussing it from a learning perspective. So Bajaj Consumer, during the peak of panic in March this year, there was a big panic, but Bajaj Consumer was available at a huge level of margin of safety. The stock was available at 170 rupees, and the company is 90-year-old business, and it had a cash on balance sheet of 700 crores, treasury, liquidation treasury, and a business which is struggling because most of the revenues is coming from almond drops hair oil, and the brand is struggling. But still, there was huge level of margin of safety, but there were possibility of upside because Bajaj Consumer launched 15 new products under the almond drop category. If in future, if there is these products gain traction, you can get a upside also. On the downside thing, the company was trading at a market cap of 2500 crores. It was trading nearly at one time sales, where the competitors like Marico were trading at five times and times sales. This company at 2500 700 crore market cap, it was available with 700 cash on balance sheet. It can survive any such bad turns. So there was huge, and even if I calculate the intrinsic value on the basis of future cash flows, the intrinsic value of the company was around 3500 crores. You're getting the company less than 3000 crores. So you are knowing that there is huge margin of safety. You cannot have a permanent loss of capital there. And what has stock done after that? What has stock done after that? Let me just show you. Without much change in the fundamentals, what has happened is Bajaj Consumer. Bajaj Consumer, I think I posted that. How many of you have gone through my tweet? I posted this tweet. It was trading at, see, 7th of April, 160 rupees. Bajaj Consumer. Without much change in the fundamentals, the stock has went up from 160 to 300 from April 2025 to till today. Yes, someone is saying that, yes, I got a big conviction and I benefited. So the stock went up 2x without much change in the fundamentals. That is what happens with the margin of safety. So, so Bajaj Consumer, let me just tell you, today it is a market cap of 3860 crores. Then it had a market cap of 2200 crores. At here, then it was a market cap of 2200 crores. Today it is a market cap of 3800 crores. Then at 2000, so the company was doing a revenue of how much? 1000 crores of sales. It was trading at two times sales. And Marico, 95,000 crore market cap and 12,000 crore sales, 10 times sales. So Bajaj Consumer, were having a company at 2 times sales. Marico was trading at 10 times sales. Are you getting a sense of margin of safety here? Please comment as MOS in the comment box. So these were two live cases. One case which was COVID, which we discussed on our YouTube channel, in our community, was BSE. And second, the recent example is Bajaj Consumer. So the question, if you have that, if you are going to see why you must be least worried about any mishap happening, because if you have margin of safety in the stocks, you cannot have permanent loss of capital, because just by fearing the market कि भाई यूएस का बबल बस्ट हो जाएगा, you cannot keep yourself away from the investment. What you need to have is, if you are in a stock market, you need to follow that you should not have the permanent loss of capital. टेम्पररी ड्रॉडाउन तो आएगा, अगर आपको टेम्पररी ड्रॉडाउन भी नहीं चाहिए, you should not be in stock market altogether. So two cases which we discussed, Bombay Stock Exchange and Bajaj Consumer, these were past cases, one very old case and the recent case. But the live right now, the case which is there is Jindal Drilling. Right now, Jindal Drilling is a case which is a live case study right now. Market cap of this company is how much? Can anyone tell? The market cap of this company might be around today's market cap is around 1600, 1700 crores. And the liquidation value of the company is around 2000 crores. Jindal Drilling and Industries, current market cap of the company is 1656 crores. And the liquidation value of the company is 2000 crores. At a later stage, if I find that article, if I find that our work which we have done on Jindal Drilling, I'll post that on Conviction Club. The detail why we found that the liquidation value of the company is around 2000 crore. I'll post that later. Stay tuned on Conviction Club. But as of now, just give the importance to margin of safety. But margin of safety doesn't mean anything. It tells you that you cannot lose money. Margin of safety should be accompanied by research of future, how can be the future cash flows and all, where the business can go. If you have this combo, the margin of safety plus the business direction in future and how the revenues can increase and all those things, apart from liquidation value, you can have a high conviction bet. So current case of margin of safety is Jindal Drilling. Please do not take this as a recommendation. As I said, that this is just a case of margin of safety. So, hope you have got a fair bit of understanding of what margin of safety is, and how, and it must have helped you to understand how it can solve your problem of permanent loss of capital in markets. Please comment as MOS in the comment box if you all have got the understanding of MOS, margin of safety. Please comment as MOS. And let me just tell you that if you are worried about the fall in the US market, and if you are a part of deep value portfolio, you should not be worried, because deep value portfolio consists of lot of margin of safety stocks. So nobody can predict when exactly it can happen, though FTVT model can help us understand. But let us say, we if FTVT model doesn't help us understand the downturn which might come in market, so second level additional safety is margin of safety. So this was all about margin of safety. Now let us move forward with the weekly roundup. So thank you everyone for joining in, and let us continue with the weekly roundup. So frontline indices, India VIX closed at 11.94. It was down 4.9%. Then Nifty 50 index was up 0.1%. Nifty mid cap 100 index was up 1.5%. Nifty small cap 250 index was up 0.37%. Nifty Public Sector Enterprise was up 1.16%. BSE IPO Index was down 0.31%. What were the sectors which performed? Nifty Defense Index was up 4.1%. Nifty IT Index was up 3.4%. Nifty Pharma Index was up 2.9%. Nifty Infra was up 2.4%. Nifty India Digital Index was up 2.4%. Now let us look at commodities. In past 1 week, what has happened is silver has gone up 4.2%. We discussed that on satellite channel also. Gold was up 2%. Copper was up 2% nearly. Lithium was up 5.9%. Natural gas was up 4.5%. And these were the other commodities. So, and what are the key developments this week? Trump says that we are going to bring down India tariffs. So that is a big trigger for Indian markets. It can happen. If it happens, it can bring a fresh round of rally. But as of now, as we know that the rally is happening, which is selective in markets. We have been talking about it. The rally has been selective. Second development is India proposes anti-dumping duty as high as 130 USD per ton on met coke imports. Third is India cabinet declared New Delhi blast as a terrorist incident. So you might hear, see, defense index is up 4% in past 1 week, just after this terrorist, around this terrorist attack, which you can think that India might take a step this time against this terrorist act. You can hear that any point of time, and the markets are saying that Nifty index, defense index is up 4.1%. So anytime you might see India Pakistan tensions rising going forward. So, Strategic Alpha's FTVT framework, sectors factors, the sector is the same: PSU Bank, Nifty Metal, and capital markets. Factor is value. Value is the factor. I have not written it here because of shortage of time. Let us move forward. So, what's up with Nifty 50? So, after the consolidation, last week itself, I had discussed this. The markets bottomed. Markets might have the next week onwards we might see. Last week only we talked about it, and this 1 week we have seen that markets resuming, and it is very closer to the breakout. The breakout might happen after this stage, uh, but breakout has not yet happened. Nifty mid and small cap index. So breakout level is 20,772 on weekly closing basis. But you should not rely much on this unless and until the breakout happens. Breakout confirmation might take time. It might also consolidate for long. The real problem at this point of time is different, because markets, Nifty is going strength, index is showing strength, but the portfolios are melting down. Somewhere they are struggling. Is this happening with you? If you are not in PSU, capital market, and metal, your portfolio might have struggled in past 3 4 weeks or 6 weeks. Is it true? Please comment as true in the comment box. Because the bull run, as we have been discussing from past many weeks, it is selective. It is selective. So if you are not owning these sectors, you are underperforming. So that is what is happening. So if the breakout happens, this situation can change only and only when the breakout on mid and small cap happens about 20,772 on a weekly closing basis. Until then, the situation might be the same. And why I'm saying so is because of this. Just look at market breadth indicator. Just look at this data. This is percentage of stocks trading above 30-week moving average by market cap. If you look at this, even earlier I had said that large cap is the place to be, and large cap is denoted by blue line. So blue line is up, which means number of stocks above 30-week moving average, which means stage 2 uptrend, large caps is the highest. And the least is small cap, which means small cap is still struggling. Mid caps and small caps are both are struggling, only large caps are holding, and this is also evident by the data. Now look at number of stocks above and below 200-day exponential moving average. See, usually the stocks, once they cross 200-day exponential moving average, they are qualified as an investment bet. That is the general understanding. So this green line denotes the number of stocks about 20 200 day exponential moving average. So if the number of stocks, this ratio is, if this line is going down, which means the market breadth is weakening on a day to day basis. Here, the below 200 exponential moving average stocks, this line is going up, which means the market breadth is becoming bad, which means the markets are highly selective. Money is getting channeled into large caps, mid and small caps are struggling. So this is what the situation is. So if you have not, so how to implement this in your portfolio? So if you are heavily allocated to small caps and mid caps in on your overall portfolio, you might continue to struggle unless and until the breakout happens. So don't wait for that breakout to happen, because you don't know, because there is a worry. Understand that US markets, if it turns bad and if some collapse happens in US, the market segment which is the weakest will get the worst hit. So this is the time, let us say mistakenly you might have allocated more to small and mid caps, and you might have not followed the perfect asset allocation, the right asset allocation. This is the time to fix your asset allocation. Don't think that that breakout might come. It might never come in small and mid caps. Maybe always I have told about this. Always think in a way, what if a bear market starts tomorrow? Think in that way and start to act accordingly. So that is what should be done at this stage. Sector rotation and stage analysis update. So this is where the money is flowing. The money is flowing in banks, metals and mining, energy, auto. So these are the sectors where the stocks are holding, they have not fallen. And this is stage analysis. Stage 2 is Stain Winston stage analysis tells that stage 2 means the uptrend, stage 4 means the downtrend. So the number of stocks which are in downtrend are have just crossed in November, then number of stocks, and the number of stocks which are in uptrend, the number of stocks has fallen down. What it means is, at this point of time, the breadth is weakening. So market selective bull run is happening, but the breadth is weakening, which means the slow grinding phase is there. So this will tell you that asset allocations, if you have not done it properly, few days back, few in the community, we have also told our investors and invested into the sector funds like capital market theme and all, so which is doing well compared to the market. So if you are not owning such outperforming themes, you'll be struggling. As simple as that. So maintaining the right asset allocation is very much important. Asset allocation सही है, बाकी सब दिमाग का दही है. That is what I always say. Now let us look at precious metals. So first let us look at gold. So gold, after the fall, there has been a trend change breakout which happened, and recently, just after the trend change breakout, there was a sharp fall also. So is it a start of a fresh uptrend or a bull, or is it a bull market trap? It is still the question. It's still the question. I've been talking about it, that gold and silver are not the best place to be if you want to invest it for lump sum. Yes, gold and silver both are in long term bull run at least till 2028 2029, but at this point of time lump sum should be avoided. And if you are a trader, then it's a different part, because you will be having stop losses. But if you are an investor, uh, lump sum should be avoided, and it gold and silver is only good for SIP, because at this point of time it can be a bull market trap. The fresh bull market can only resume when it touches all-time high. But until then, it can be a bull market trap. So this is what the stage is. Now let us look at Nifty in USD versus S&P 500 in USD. So in the last 2 months, Indian markets have started outperforming US markets multiple times during from the same stage. Uh, the outperformance of Indian markets have resumed, which means if the US market falls, we'll be falling lesser than US market. So that is a good sign. That is a good sign. So that is what the this ratio is telling us. Now let us look at silver. So silver to gold ratio. So even though let us say if the gold and silver both outperform go does well from here, gold and silver, precious metal does well even from here, where I am suggesting not lump sum only SIP at this point of time in the mutual funds. Silver can still outperform gold. In a falling precious metal market, silver shall fall lesser than gold. But in a rising precious metal bull market, silver can do exceptionally well. Why I'm saying so is because of this ratio. Ratio has, it is the median line, green line. It is not even near the median line, which means ratio can still out has the room to outperform. And as far as fundamental understanding, we have discussed that in silver super session, silver massive breakout ahead. You can go through that. It is available on YouTube. The outperformance for silver can last for long time and it is far away. So silver can do better than gold. When I'm saying silver can do better than gold, I'm saying in both ways during the falling as well as rising market. So silver can be outperformer. Outperformer doesn't mean that it will not fall. So silver is at a stage. So where is silver headed in long term? So if you look at this, this is $50. Month end has not yet happened. This is monthly chart, which means at the end of the month, we might get a confirmation on a fresh breakout maybe. But until then, and it can even fall from here also. So that's why I'm saying just looking at the rise in gold and silver, you should not be bullish at this point of time on gold and silver. You can be bullish, not heavily bullish. It is good to do SIP, not lump sums, because it can trap you. There is the margin of safety which was there in gold and silver 18 months back. That margin of safety is not there. So it is good for SIP. But if it breaks out from here, fundamental value also for silver, based on the comparison on gold to silver ratio, it should reach 65 to 70 USD. But on a chartical formation, it can overall, it is understanding and overall go through the detailed video on silver where we have discussed why it can be in a bull run till 2028, 2029. And silver upside can be anything like 60, 70, 170 also, which we don't know at this point of time. But the structural overall fundamental value and technical structure looks in a favor of silver. But be a SIP investor at this point of time. When the gold to silver ratio was at rarity, 40-year rarity, that was a blind investment opportunity for silver investors. When silver was around 88,000 to 90,000, that was a golden once in a decade, no, once in a century kind of an opportunity. That is when we made a video on that. But that opportunity is not there right now. That is the time where I myself pledged my gold and invested into silver. And that played out beautifully. Now, once again, silver, is it a start of a fresh uptrend or a bull market trap? Chart is not giving me much of confidence for bull market. For trading, it might be a different thing because you will be having a stop loss. But from an investing point of view, it is not giving me full confidence. PSU Bank, this is how it is going. We discussed about PSU Bank some three months back. It's been continuously doing well. Nifty Capital Market Index is nearing all-time high levels. It can enter into fresh bull run. It has done extremely well. We have been discussing about it. Capital market theme has done very well. And I think now let us look at Bitcoin. This is long-term logarithmic chart. I think the most of the pain in Bitcoin is done. It is at a this is Bitcoin to gold ratio chart. This is not Bitcoin chart. This is Bitcoin to gold ratio chart. If this ratio charts break from here, Bitcoin can enter into bear market. But I think most of the pain is done if I look at the support zones. Uh, Bitcoin is at a crucial stage where by the end of the month, it can confirm whether the fresh bull run is resuming or it can enter into a bear market as far as the data says. So by the end of the month, we shall get more clarity. So we had discussed about turmeric also. So turmeric, the risk management has got triggered when it got broken down from this zone. We saw a rally in turmeric 18% when we discussed about it for the first time few months back, 2 months back. Bitcoin usually again it had seen a fall of 28% from the top, 31% from the top. Today we are at 25%, maybe 4-5% pain more. But I think it is near a make or break level. By the end of the month, we'll get the clarity. Maybe by today also, we might get more clarity at the end of the week, today or tomorrow, Saturday end. So, if it fails down from here, Bitcoin can enter into bear market. So, in terms of worry on the US market, what is that I am tracking? Nvidia is what I'm tracking from. It is the poster boy of current bull market. But as of now, there is no worry. The formation looks like there was a fall because Michael Burry created one of the big shorts on Nvidia and Palantir. These are two stocks where Michael Burry has created big shorts. And because of that, there was a sentiment because of which Nvidia fell down. But as of now, there is no worry. I'll be worried when Nvidia falls down below 160. That is the time where I'll say that I'll also start looking at other parameters where I'll say that maybe US is the trouble for US markets have just may have started, and I'll be more worried on my Indian investments also, because if anything happens in the world, we cannot be fully protected. Yes, we might fall less, but we will fall. So this is the thing which I'm tracking along with Bitcoin also. So along with that, let me just tell you about this that we are hiring fundamental research analysts for bottoms up research. You can take a note of this. If anyone who is interested in joining our passionate team, you can mail us. So this was all about this week's weekly community connect session. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, YouTube, Instagram, and Twitter. This is my Twitter handle. Some of you are not a part of VIP access. This is VIP access is available for all. This is not any charge. You can be a part of it. This is how it looks. Strategic Alpha VIP access, and this is how the channel looks. This is the link @ Strategic Alpha 1. Don't fall prey to any other false channels. This is the channel you should join. I'll be start taking uh, techno value investing workshop. So do register for that workshop.